Hello and welcome. You're watching the Small and Mid Cap Show here on NDTV Profit. Interesting market today. Of course, we have the benchmarks which are in the decline. We're seeing a bit of decline even on the broader markets. So we're seeing pressure there. But one sector which is surprisingly, standing up on an otherwise tough day is the Nifty IT. And let's pull up the sectoral indices and try and zoom in on the Nifty IT in particular. So 0.2% higher on an otherwise very difficult day of trade. Let's pull up the sectoral indices if we can. And what we're seeing within that sectoral index is the Nifty Auto under a bit of pressure, 1.5% or lower. But the Nifty Metal as well as the Nifty Realty is down 2.5+%. That's where all the pain is coming from. Defensives, FMCG as well as IT are doing surprisingly well and resilient on the back of Infosys numbers. Really very little doubt there. Let's pull up the Nifty IT constituents. And we had a couple of numbers coming through. We had Persistent as well as Infosys, both of which are now moving in very different directions. The large cap IT names doing fairly well. HCL Tech, TCS, both of which are trading higher. I also have Tushar with me, and of course we're going to have a conversation with a couple of managements as we always do on the Small and Mid Cap Show. But in particular, let's try and zoom in on CEAT. Tushar, talk us through just the numbers of CEAT and let's kickstart the conversation.
So if you just look at the numbers straight away, both revenue and profit went up on an annual basis, but there was operationally, the performance was not up to the mark. The company is saying that's due to higher input costs, commodity costs, but the growth is coming on the back of replacement demand as well as improving exports. So essentially now when we speak with Mr. Arnab Banerjee, he's the CEO of CEAT, we'll get more color on what the quarter was like for the company and the way ahead. So Mr. Arnab Banerjee, welcome to NDTV Profit.
Good morning. Well, thank you.
Yeah, so revenue is up, net profit is up. What explains the margin hit in Q1, sir?
The margin hit is primarily on account of input cost. If you look at natural rubber, which is at 209 rupees per kg as we speak, it's at a 13-year high. And there's been a significant inflation in a short span of 3 to 4 months from about 150, 160 to 209. When inflation happens at a gradual level, we can manage the margins better. If it happens at a very steep gradient, then there's a hit in the quarter, which is what has happened as by way of margin squeeze. There has been torrential rains down in the southern part of the country. Tapping has been low. And as you know, in the import markets, the container availability situation is very bad. So the lead times to have imported rubber land up in our country has gone up. And some speculative activities, therefore, might be going on. We expect this to reverse by August, September of this year. And even out in the second half, tapping is going to bring a lot of more rubber quantities in the market. And the container situation is also going to even out, hopefully by August end. So we expect this situation to reverse sometime starting August.
Okay, so is the margin hit due to the input cost large enough to offset the premiumization that you're actually witnessing in the tire space, specifically in the four-wheelers market?
Absolutely. The impact is about, if you take quarter 4 to quarter 1, the price hike the raw material price increase has been almost 5%. And we have been increasing price in the replacement and international markets. They are coming with a lag. And therefore, in a quarter framework, when there's a lag, there is always a hit on the margins. In the OEMs, our prices are indexed to underlying raw materials, and it comes with a lag of 1 quarter. So the quarter 1 price hike, which we saw in raw material, will impact the indexed price in quarter 2. So that's the reason why you see the gross margin shrinking by about 2.5 to 3%. And it will continue in quarter 2 to some extent, because quarter 2 raw material prices will be higher than quarter 1 by about, again, 5 to 6%. But most of the price hike impact will be seen in quarter 2.
Okay, so let's extend this conversation a little bit more. We are seeing an inventory build-up in the auto space as well. Sources tell us that the auto car market is actually sitting on about 7 lakh units. Does that in any way impact you as a tire company?
At a global level, at a general industry level, yes, but particularly as far as CEAT is concerned, I think you're referring to the passenger car stockpile up. There we have sales visibility because of the fitment in new models that are going to roll out with CEAT tires by the OEMs. So we are expecting a good growth. Actually, in Q1, OEM was subdued. OEM growth was subdued, low single digit. This is going to take off for us in Q2, Q3, and Q4, especially in the second half. The two-wheeler OEMs are growing very handsomely at about 20-odd%. So there is no stock build-up there. And we expect to enhance our share of business in two-wheeler. The MHCV segment is going to come back after now that the elections are over. By end of Q2, mining activity, construction activity is going on well. So we expect OEM sales in MHCV also to be good for CEAT in Q2 as well as in second half.
Okay. You mentioned in the statement accompanying the results, you're front-loading Capex. Talk us through the Capex plans and how it fits with the global expansion plan, sir.
Yeah, so we expect an overall good growth in the demand situation as well as our investments in marketing and hence in a market share situation for CEAT going forward in Q2 and second half. We have already grown in first quarter in double digits in replacement and IB. This will strengthen. We have a very, very good order visibility in international business. And our investments in marketing in Crafted for the Curious campaign for four-wheeler is going to start having impact as we go into the second half. We have given a Capex guidance of about 1,000 crores for the year. And the first quarter has seen a Capex incidence of about 254 crores. We are sold out on truck bus radial. The truck bus radial new capacity at Chennai is coming around from August, September. So that will bolster top line. Our agri-radial, which is a very, very profit accretive business, we are done with the first part of the project, which takes our capacity to 105 tons. Our capacity utilization is low at 65 tons. We expect this to be utilized over the next few quarters, 2 to 3 quarters. So very bullish on top line, especially on the profitable segment, and hence the Capex is being front-ended.
All right. Another point that you talked about was strategic price adjustments. I dwell on this because of the fact that we have seen some price hikes by the competition. So what is the strategic price adjustments that you're talking about, sir?
When we talk about price adjustments, it is about relative pricing vis-a-vis the competitors. And we will take a call mostly on the passenger side. We have been taking a call over the last 2 quarters already. As I keep mentioning, there is a great deal of pricing independence amongst the players right now. Not only CEAT, in the industry as such. I think depending on the strength of various players and in different segments, in different product markets, the pricing decisions are not totally independent, but it is becoming independent and less dependent on what other competitors are doing. So we are going to take some calls, mostly on the passenger side, as we go along. International is anyways independent. So we have a little bit more freedom in taking pricing calls.
Okay, so your last price hike was in May. When can we expect the next one? In the next quarter or the next couple of quarters?
No, we definitely took a follow-up price increase in June. We have taken another soft price increase in July. There'll be price hikes. There'll be price hikes in small bits right through Q2.
That's across the portfolio, CV, passenger vehicles, as well as two-wheelers?
Across the portfolio.
All
yes.
right. Finally, we are seeing some changing rules on tire imports. IIT, actually the investment authority for the government, actually had said that they are allowing some foreign players to come into the market. How, like Good Day or Michelin to come into the market, how does that impact you, sir? Especially when you are actually going abroad and those players actually coming in. So where do you fit in?
See, India is a miniature global market because all the important foreign players are already selling significant amount of tires already by way of import or by actually manufacturing the tires in India. And we are a strong player in international markets. About 20% of our sales comes from international markets where we face competition from all good brands who have significant investments in R&D and technology in markets like Italy, France, Germany, and now in US, Brazil, etc. So we welcome competition, and I think the consumer will be the ultimate consumer will get the ultimate benefit. So it's not a big change from our outlook.
All right. Thank you so much, Mr. Banerjee, for speaking with us. And thanks, Tushar, for hosting that quick conversation. Good perspective. Thank you, sir, for that chat. But let's quickly address the flashes at the bottom of your screen. We have Paytm's numbers, which have come out now. We're seeing a net loss of 840 crore versus a loss of 551 crore. No real major surprise there. It's largely in line in terms of the numbers. Of course, stock is down roughly 2% or so, not surprisingly, given that the numbers are weaker when compared on a sequential basis as well as on a year-on-year basis. Revenue also lower at 1,500 crore versus the 2,267 crore clocked Q4 FY24, down 34%. Mind you, all of the overhang with regard to the Paytm payment bank as well as everything that's happening on the regulatory front for Paytm now slowly reflecting on the numbers. This is the first full quarter when that is reflecting on the numbers. The EBITDA loss has come in at 792 crore versus the 224 crore number same time last quarter. So again, that number also rising and rising quite sharply on the back of all the embargoes that have been put on Paytm. Now, on the back of that, of course, the Paytm stock price down 2.5% now as we speak. Net loss widens, and you can see that bit of blip on the stock in intraday today. But we're still off the day's lows, so that's one positive that I would take. Time to slip into a very short break. On the other side, we'll have a conversation with the management of Vascon Engineering, as well as we'll have more for you. So stay tuned to NDTV Profit.